webinar. The webinar is aptly titled Stamp Duties Compliance in Nigeria, the Twists and Turns. As we are all aware, in the last few months, there has been significant focus on stamp duty compliance by the Federal Inland Revenue Service and also some of the state boards of internal revenue. As it were, the Stamp Duties Act in itself is not a new legislation in Nigeria. It is an existing one. In fact, it is our oldest tax legislation in Nigeria, having been enacted in 1939. But there has recently been significant focus on stamp duty, with some persons referring to stamp duty as the new black gold. It is also important to note that the FIRS has recently reported significant collection from stamp duties in the first half of 2020. It is this and other issues that have made it imperative for us to discuss the issue of stamp duties in Nigeria today, being a very topical tax issue. And so it is my pleasure to welcome you to this webinar. It is one in our continuing series of webinars by Anderson Tax. We're all happy to have you here today, and we're certain that you are going to go away from this place a lot more enlightened than you previously were about stamp duties administration and compliance in Nigeria. To get us rolling, I will present a very brief overview of what we'll be discussing today. My slides are projected. I hope everyone can see me up here. And so again, like I said, the title of the webinar is Stamp Duties Compliance in Nigeria, the Twists and the Turns. We'll be looking at, of course, I'll do a brief, the introduction, like I said, is that stamp duties has recently been projected as a major source of revenue by the Federal Inland Revenue Service. This is surprising for most of us, or for some of us, who previous to now have barely interacted with stamp duties, as it were. Most of your interaction as a tax professional will come when you are either incorporating a company or when you are stamping an agreement, as it were, when you pay the stamp duty on an agreement. But there has been a lot of buzz about stamp duties, and indeed, the Finance Act 2019 introduced some amendments to the Stamp Duties Act, notably imposing stamp duties on electronic transfers in banks. Additionally, the Federal Inland Revenue Service has issued circulars and public notices on stamp duties, expatiating on what the obligations are under the Finance Act, and of course, then giving its own guidelines on how persons should comply with the Stamp Duties Act. So some of the major issues that have come up and which we'll be tackling today include the fact that stamp duties, like we said, has now been projected as a major revenue earner. And in fact, FIRS recently disclosed that 66 billion naira was recovered from stamp duties between January and May 2020. Of course, we'll be having panelists from the Federal Inland Revenue Service, and we will, interrogate these figures and ask them to shed more insight on how FIRS was able to achieve this collection. This collection is actually significant, representing for the period on the same period last year in 2019. But like I said, we're also going to be looking at whether indeed stamp duties is a viable revenue source, or it is something that is just trending and would soon fade away. Now, of course, like I said, the Stamp Duty Act introduced a number of amendments. The Finance Act, rather, introduced a number of amendments to the Stamp Duties Act. The major one that most of us are familiar with is the issue of electronic documents, i.e., electronic transactions and instruments are now liable to stamp duty. Of course, most people will say this is really just going with what is happening in the world globally. Technology is moving. A lot of physical transactions are being carried out online, so it is only proper to recognize that transactions may not be physical, documents may no longer be physical. There's also the issue of bank transfers, which now attract 50 naira on any deposit above 10,000 naira. Of course, definitions in the Stamp Duties Act were amended. We had definitions of things like stamped, etc., which were now redefined in order to accommodate, the electronic receipts and electronic documents. So there are a number of issues that present themselves for controversy under the Stamp Duties Act. And I think one of the major challenges the Stamp Duty Act has is the lack of clarity on where the taxing obligation lies. Unlike, the other tax legislation in Nigeria, for example, the company's income tax, which is very clear on who is to pay, whether it is the company income tax itself or withholding tax, the value-added tax, which is very clear, personal income tax, which is very clear. There's some ambiguity under the Stamp Duties Act as to who should actually pay stamp duties. So, for example, and these are just examples, when you have a bond or a covenant or an instrument, it says the obligee or the covenantee. In fact, some of these terminologies and terms are actually confusing. I myself had to look up some of them this morning, and these are some of the issues that we feel somehow, act as obstacles to the efficient and effective administration of the Stamp Duties Act. We also have things like conveyances, where it is said that it is the person who is making the conveyance that should pay stamp duty on the conveyance documents. Then where you have things like a gift, it is the person who makes the gift, i.e. the transferor, that should, pay the stamp duty, which is, again, a bit surprising, because if I'm giving someone a gift, I would assume that the person who is receiving the gift will be more interested in ensuring that that deed of gift is properly documented. So for leases, that is quite clear, I think, and it's one of the issues, again, that came up recently in discourse. It's the lessee, i.e. the person who takes the lease, that will pay the stamp duty. And then, of course, things like mortgages, where we have banks or mortgage institutions or other finance institutions. They are the ones who will be responsible for, paying the stamp duty and all of that. But these are all issues that need to be properly trashed. We have noted also that in some instances, the Act is silent on who will pay, but it says that if not paid or if not stamped, it then says a particular party will pay the penalty. So these are some issues that we think need to be properly addressed and discussed. For contracts, of course, FIS has taken the view that it is the beneficiary of the contract that will pay the stamp duty. Again, these are some of the questions we'll be posing to our panelists as time goes on. So in summary, again, just to quickly get us to where we want to be, we're aware that an Inter-Ministerial Committee on the Audit and Recovery of Previous Year's Stamp Duty has been recently inaugurated. In fact, I'm aware that there was, I think, an inauguration ceremony yesterday by the FIRS, and the focus of the committee is actually to carry out an audit of deposit money banks, NIBs, CAC, etc., of including government agencies, ministries, departments, and agencies that have collected stamp duty. Of course, the issue of financial institutions also brings into focus the Cbn Circular of 2016 that I had alluded to, which had previously, directed banks to collect a stamp duty charge of 15 naira on all electronic transfers. We'll also discuss the legality and the validity of that particular circular and whether it can be implemented in the light of decisions of courts, like that of the Standard Chartered Bank versus Casmal and the retail supermarkets, where, in fact, the entire circular was shut down by the courts. So just to tidy up, we will, of course, look at issues like some of the rates being communicated by FIRS. What is the basis of these rates? We've had, for example, on insurance policies, FIRS has communicated an ad valorem rate of 0.0075. But, if you look at the Stamp Duties Act, you may not likely find this particular rate in the Stamp Duty Act. Of course, there's also the JTB Circular of 2002 that amended the schedule to the Stamp Duty Act. That circular would also be in focus, again, because of decisions of courts like that in the, hotel owners, trustees versus Attorney General of the Federation, where it was held that, a government agency who does not have legislative powers cannot validly amend the schedule to an act, and that power is strictly that of the legislature and can only be exercised by the legislature. In fact, the court went further to say that power cannot be, delegated. So these are some of the issues we will be looking at today. Again, like I said, this whole idea is really to ensure that everyone understands what their obligations are, and of course to also provide some feedback, as it were, to the FIRS so that they also understand what the concerns are, and then they are able to address them, hopefully. So having concluded this, I would now proceed to, of course, introduce our distinguished panelists. Let me just put up our flyer so that we can see the faces of our panelists here very quickly. So the first panelist I'll be introducing is Chinedu Ezumike. He's the partner and head of the commercial practice in Anderson Tax. Chinedu is a distinguished tax practitioner. He's a KPMG alumni, and he's very knowledgeable about the issues that will be put forward today. We also have Baba Alukolaro, who is the managing partner of the new practice, TMP. TMP is an Anderson collaborating firm. It is a boutique firm in Lagos, one of the fastest growing law firms in Lagos and probably Nigeria. Baba is also a very knowledgeable person when it comes to the issues of stamp duties and tax legislation generally. Then we have Femi Olarinde. Femi is the special assistant to the executive chairman of the Federal Inland Revenue Service on tax policy. I know Femi personally. We've worked together. He's a very knowledgeable person, very articulate. He would also be helping us today to give us the insights from the position of the Federal Inland Revenue Service. And lastly, my friend and former colleague again, Abayomi Makinde, who works with Stanbic IBTC. Makinde is also a KPMG alumni, Abayomi. He's also very knowledgeable about these issues, but more importantly, he's going to give us the perspective from the industry, i.e. those who are wearing the shoes and who know where it pinches best. So having introduced them, I would then open the floor now by asking Chinedu to give us, just take out 2-3 minutes and give us his general ideas or viewpoints on this new focus on stamp duties, i.e. what do you think is driving the focus on stamp duties by FIRS? Is it because oil is selling at an all-time low? Is it because, we've had a pandemic and then, of course, government is just looking for revenue wherever it may be? Or is it really born out of, FIRS's, mandate to ensure that it implements and administers all tax legislation? Because one of the questions that people have asked is, what is so special about stamp duty? This act or this legislation has been on our books for over 80 years now, and then suddenly it has now become, an attractive bride. So just tell us from where you stand, and also, of course, given you're a practitioner, how is the professional services firms, how are tax advisors taking this? Are they happy? Do they see it as an opportunity for them to provide additional services to their clients, or do they think that FIRS is overreaching? So just give us your brief viewpoints on this.
Thank you very much, Mike. Yeah, thank you. It has been an interesting time, with the stamp duty issues, like you said. Stamp duty is a very old law, older than even our VAT. And stamp duty is essentially a tax on documents. For some reason, it has not been a very popular law. We have not really focused on it for a very long time in Nigeria. And as the FIRS or the federal government became squeezed with cash and for more revenue to develop, then there was this attempt to look for alternative areas where the government can raise funds. So the focus is simply on raising more revenue, definitely. There is no other there's no other value that stamp duties really or necessarily gives to people except raise more funds for government. Well, like you said, it's a valid tax law. So government is not overreaching. It has been there. But what is clear is that it requires a significant overhaul, because when you make a tax law, when you bring a tax law of 1939 to implement in 2020, it will be clear that there will be a lot of issues, and clearly there are a lot of issues. With the Finance Act, the government tried to resolve some of the issues, but clearly it wasn't sufficient. One of the key principles of taxation is clarity. People need to know what taxes they need to pay, when they have to pay it, and who should bear it. And when you have a tax law that hasn't made that very clear in so many fronts, it defeats the purpose of taxation. Yes, I'm not surprised that the government is raising a lot of revenue from it, because the easiest one to collect is the stamp duty on bank transactions. And again, one of the principles of taxation is ease of compliance and ease of collection. On that particular one, it's become easy because all you have to do is focus on the few banks as agents of government and have them collect it. So I'm sure that is one area where government will make a lot of money. But on the other aspects, like what you mentioned, the deeds, the rental agreements, and all that, it's hitting people at a wrong time. Taxation is important, taxation is key, because government needs revenue to maintain our society. But under a situation like we are, I mean, I'm sure you're aware of the GDP figures. The economy is shrinking. We just raised VAT by 50% and all that. And this is the same time where you are coming to fully implement a law which, granted, is not a new law, has been there, but has not been fully implemented. So there is this, people feel this sense of siege, as if government, you know, they're being attacked from all sides. And the trust quotient between the people and the government is very low. Most taxpayers are not convinced that their taxes are being utilized in the best possible manner by the government. Every day you hear issues of corruption and the issue of mismanagement of funds and all that, and on the same tax you feel so much pressure to government trying to collect money from taxpayers. So most taxpayers are caught in that mix, that they are feeling under siege, they are feeling like the business environment is becoming hostile. So that's what we're seeing in the industry. So I agree that government needs the money. I agree that they should focus on collecting what the law has allowed them to collect. But the way and manner you go about it becomes extremely important to give to, so that people don't feel besieged.
Okay, Chinedu, thank you very much. And maybe let me allow Baba to pick it up from here. So Baba, as a lawyer, of course, if a legislation is on your books, it should be implemented. But how you go about implementing the legislation is as important as it's very important, because if you have a valid legislation on your books, but you're implementing it in a manner that is not in line with what the law says, then of course, it then loses its legality. So I'd ask you first, having known in view of what the FIRS is trying to do, i.e. go back 5 years to enforce the stamp duty on electronic transactions, which was imposed on the basis of a circular and not the law. So the Finance Act, as we know, only became operational in February. Is the FIRS entitled to then go back 5 years to implement the the Cbn Circular? But more importantly, tell us what you think in terms of the Stamp Duty Act, and then what do you think really government or FIRS should do to ensure that it can efficiently implement the Act? Or are you happy with the Act? Is it okay? Is it something that needs touching? Or maybe all we need to do is just change the date, reenact it in 2020, and then just leave it as it is? You know, you see so many things like covenantee, obligor, charter party, some terminologies that, you know, to the average taxpayer sound very strange. So first, answer the issue of, in terms of how FIRS wants to implement, can they validly do what they want to do in terms of the 15 naira charge? And then secondly, what do you think should be done to the law? Do you think that the law is okay as it is? Does it need an overhaul? And then are there areas, specific areas that you think FIRS should, or the federal government should look at?
Thank you very much, Michael. Chinedu, great to see you again. As regards the power of the regulator, FIRS, and this issue of 50 naira on financial transactions, we all agree on this call that the Stamp Duties Act itself is antiquated. It's almost 80 years old, so probably old, I assume it's older than everybody on this call. And as such, certain actions that government wants to take right now. I mean, nobody's ever liked the tax man, as far back as I remember, even from the Bible. Government trying to over squeeze the common man using stamp duties right now in generating additional revenue. I think the provision of that law, it's clear itself, did not envisage that we'll be having Teams/Zoom telephone calls/working right now remotely. And as such, these are not transactions that I believe, in my opinion, are captured under the statute. As much as government wants to generate revenue, it is critical that government doesn't only do the right thing, but is seen to do the right thing at every time. In terms of the time frame, going back 5 years, the law is also clear, and you find from a number of commercial transactions in deals that you're doing, particularly when you in the M&A space, when you want to look back vis-a-vis tax liability, generally we always include clauses in those agreements to ensure that even from a limitation law perspective, that you can't go beyond 6 years, irrespective of what the statute provides. Now, the FIRS Act in itself gives you provision that says that the Stamp Duties Act, must be read and applied, particularly Section 34, must be read and applied in accordance with the provisions of the FIRS Act. So I don't envy the human beings like me and you that work with the FIRS, but the truth is, the law is clear, and from a public policy perspective, even the regulator and government itself must follow the letter of the law.
But you haven't said anything about what you think about the act. So you're happy with the current state of the act, or you think it should be stripped down and reenacted, or it's good?
I'm sure you want my fiscal action. I mean, the act itself is no longer fit for the purpose for which it was enacted. The act followed the Stamp Act of the United Kingdom, 1939. They have significantly and substantially amended that legislation. We haven't done it. We've had a democratic government now for the past, 1999, you're saying 21 odd years, and we've had a legislature that has been in place time and time again. We've only recently just repealed CAMA and reenacted it, and it took us forever. I mean, this is one of the statutes. One of the provisions here in terms of stamp duty that you must pay is applicable to apprenticeship. I mean, for crying out loud, we're still talking about apprenticeship in the year 2020. So, I don't envisage the people like my brother that is representing FIRS here, that I feel that, you're going to get a barrage of questioning and bashing and, you're the tax man. But the law needs to change, needs to be repealed, overhauled, reenacted. In fact, I don't know, stamp duty in 2020.
Well, Femi, I hope there's air conditioning in your office, because it's about to get very hot. So, but because you're my friend and my brother, I'll take it easy with you. Okay, so the first question I want to ask you is, Femi, what is driving FIRS? Or let me use our local parlance. What in the pursue now? What is really happening? Why this new focus on stamp duty? Is it just a realization that this is a revenue source that has been neglected over the years, or is there something FIRS knows that we don't know? That's the first question. So what is really driving this new focus? Secondly, in terms of the implementation of the Cbn Circular, do you think, or is FIRS of the view that it still has the powers to implement that circular? Because like I said, you're aware of the Standard Chartered Bank decision, and you're aware of the decision of Retail Supermarket, which I said that the circular is not valid. I know that the Cbn or rather I read, so let me not say I know, I read that the CBN transferred the funds which the banks had collected to FIRS on the basis of that circular. Again, these are issues we just read, so I don't know how true that is. But is FIRS intending to implement the circular even after those decisions have been passed? And in terms of, your FIRS information circulars, there are certain issues that have been expatiated there. I know you are aware of the controversy that came out on WhatsApp. A lot of people were like, FIRS wants to tax WhatsApp messages. I think I understood what FIRS was trying to say, but maybe the way it was put out in that circular wasn't very clear. So Femi, tell us, please.
Okay. Yeah, good morning, everybody.
This whole issue, banking about it every day.
Hello?
Yes, please.
Okay, yeah, good morning, everybody. Thank you, Mike. Thank you, everybody on the panel. And thank you, Anderson Tax, for having me. Okay, to answer your question, what is driving FIRS even at this time? Well, it is no longer news to all of us that, number one, when you have a law, like I'm sure the lawyer said it, when you have a law, it's only proper for you to implement the law. And if you're being given a responsibility to do something, of course, you need to fulfill that mandate that's been given to you by doing your job. So the first thing is that we just have to not look at one tax over the other. We need to ensure that all the laws that we are being given to administer is appropriately administered, not trying to favor one over the other. Also, if you look at the national tax policy as it is, we've been advocating, and not only us, all over, that you should look at how you move from direct taxes and you concentrate more on indirect taxes. And also, when you look at that, the Finance Act 2019 try to see how to de-emphasize on direct taxes a bit by giving a threshold for taxes for people under 25 million and below, taking them away from the tax net, which will actually reduce the tax payable, tax collection. Number one, that's number one. Number two, it also look at giving reduce tax rates to some certain class of taxpayers. This is also definitely trying to move away from the direct tax. And also, what do you need to do? You need to now try to how you ensure you can effectively collect from your indirect taxes. So we need to look at this tax law that has been redundant for many years and see how we can revive that tax law, and which is an indirect tax. And of course, like I think Chinedu explained earlier, it's one of the way the taxes are easy to collect. One, it's a reduced cost of administration. It's a reduced cost of compliance. So we need to move to this angle. We need to move from what we're doing before to ensure that. So those are actually the policy thrust of government at this time, not only FIRS. Of course, we cannot also take away the fact that government needs revenue, and actually that is the essence of having a revenue administration. Government needs revenue to provide the public goods, and so government needs to come up and see how to drive that which is all encompassing. So I'd like to move to your second question about the validity of the Cbn Circular and why is FIRS still insisting on that. I'm sure, Mike, if you look at the judgment from on the Standard Charter case, I'm not sure the judgment said the circular was not valid. The judgment only said that Casmal Ventures or Casmal did not have the authority to implement or to collect stamp duties. Also, that NIPOST, which was the principal who actually commissioned CASMA then did not have the authority to administer the Stamp Duties Act. So the judgment did not say that the collection of Stamp Duties Act, the collection of stamp duties from transactions and money deposit banks was illegal. So it wasn't. Because I'll refer you to Section 89 of the Stamp Duties Act, and I will quote. It says, for the purpose of the Act, it tries to explain an expression received that is to include any note, memorandum in writing whereby any money amounting to 4 naira or upwards, and I'm reading for you the old law before now, the law that was in existence when that circular was drafted. It said 4 naira or upwards is acknowledged or expressed to have been received by or deposited or paid, or whereby any debt or demand or any part of the debt or demand of the amount of 4 naira upward is acknowledged to have been settled, satisfied, or discharged, or which signifies imports any such acknowledgement, and whether the same is not signed with the name of any person. So this provision is what was relied upon to activate that collection with the MDBs at a point in time. And so this provision has always been in the law. The provision is still in the law. It was only made clearer by the Finance Act, where it created a new Section 89(3) that now specifically says when there is an electronic transfer of money deposited in a bank. So it was only just an attempt to make it clearer. It wasn't that, it was not available before. So I'll move on from there.
Sorry, I guess the last let me just 1 second before you move on. You know, I asked you if there was air conditioning in your office, and that was a deliberate question. You've not addressed the decision in the retail supermarkets, which was more direct and straight to the point. And in fact, it actually said that the circular is null and void. So, you know, what about that decision?
The decision about the retail supermarket receipt, I'm sure the provision I just read to you now, it was talking about receipts. It says receipts. So retail supermarkets issues receipt every time you purchase a good. And it's very clear that they acknowledge money paid by you for goods you bought. And that is why they issue you a receipt. So that is the essence. That's the provision that is being used to administer that particular collection. Hello?
Yeah, move on. I'll let you pass. Move on.
Okay. Well, I can't remember. Is there any aspect that I have not addressed out of what you asked?
The last one we said is that we heard that FIRS is intending to carry out audits, and we understand that an Inter-Ministerial Committee has been set up. We understand that consultants have been engaged, etc. So give us some insight into what the focus of the audit will be and how those audits will be conducted. Also, we've been informed that there are amendments have been proposed to the Stamp Duty Act. So just give us a bit more information on all of that.
Okay, about the audit, of course, you know that's a national assignment. It was being activated by the Attorney General of the Federation from its power under Section 116 of the Stamp Duties Act. Under that section, the Attorney General has been given the power to actually recover duties and fines summarily. So that is the power that the Attorney General activated. And FIRS being the administrator of that law and the collector of this particular tax is actually at the center of that assignment. And so we are the secretary of the assignment, and we are part of the assignment. And it's a national assignment. Like I said, it is not just an FIRS project, and that is That is why that is done. On your next question, sorry, can you refresh? I can't remember it.
Yeah, the proposed amendments to the Stamp Duties Act.
Okay. Well, the FIRS, including the Nigerian government, of course, cannot just hear people speaking out there and making complaints and try to like what we are doing right now. A lot of people have said that the law is a cake, it is not clear. So there's been several issues about the rate too. So the next thing government needs to do actually is to look at it. And definitely I can confirm to you that we are part of those who are working on that law. And the first step is actually to see how we can make the schedule to the Stamp Duties Act clearer, simpler, and more at least also in tune with present realities. So we are definitely working on the schedule, which we will be working, of course, whatever we are doing, we are only preparing the grounds for those who have the responsibility to do that, which is the National Assembly. And in due time, we're going to see the outcome of that assignment. Okay.
Femi, you can take a quick sip of water. We'll come back to you. Let us go into the industry now. Abami, welcome to the webinar. Thank you for finding time to join us. So you've heard all that Femi has said. If I may summarize what he has said, look, nobody's targeting the banks. They're only implementing the law as it were, and they're not asking you to do anything extra. All they're asking you to do is to implement the law as it were. From your own point of view, as someone who is in the financial services industry, in terms of the implementation of the Cbn Circular, how was it received? And you're aware of these decisions, especially that of Stanchart and retail supermarkets. Has that changed the attitude or the behavior of the banks in terms of how they are going to implement, stamp duties? And then also the new stamp duty charge of 15 naira per transaction. Is it an additional burden to use it an administrative issue? Or how are you preparing for the proposed audits? What is your view? Do you think that government should be using consultants to audit the banks, or you really don't care, as you're confident that your books are in shape, so whoever comes to audit you is not a problem for you? So just give us a sense of what the attitude, the approach, or the feeling is within the banks.
Thank you, Michael, and thanks to Anderson for having me. It's a pleasure to be on this webinar. I will take it from the first issue you raised, which has to do with the Cbn Circular. As you are aware, for us financial institutions, Cbn is the regulator, and you have an obligation to implement whatever circular issued and directive from your regulator, which has been the case. So from 2016, most banks have been compliant, charging the 15 naira on all the deposits and remitting it as instructed. Well, the issue of the remittance is another thing, which we had to be remitting to a Cbn account, though then NIPOST, but now moved to an FRS account with Cbn. We have an obligation, which is what most banks have done. We've been compliant since 2016. As to the legality and the court judgment and on the deduction, I mean, we'll leave that to the tax professional, to the lawyers, and to the administrator. We are an agent. We have an obligation, and we can only carry out whatever regulator has instructed us to do. We may not be able to question their instruction. But if you take from February 2020, when the Finance Act came on board, we can talk that this is now in the law. The law instructed that we should charge the 15 naira remit, which is what we're doing as a bank. And the court judgment, because of the amendment to the Act, came subsequent to the court judgment. I guess we are all leveled now. There is a law by supporting the deduction of this 15 naira as stamp duty on deposits. Is there an additional burden to the bank? Definitely. As a bank, your business is to serve your customer and play in a fair environment. But we've had a lot of issues implemented it. There were a number of issues in the course of the year when a bank have to charge some of its customers and when they realized they were not compliant. And at the end of the day, the bank has to bear this cost itself. So these additional costs to the bank. Is additional burden, and we are all aware of what is in the news. The state arguing that the 15 naira on individual stamp duty should come to the state. While NIPOST is also requesting that the bank should be remitting this stamp duty to its own account, not to FRS. And it creates a lot of confusion and ambiguity, which I think we've all alluded to. Chinedu has talked about it, Baba has talked about it. The law as it is difficult to implement. It is not clear.
Can we all hear Abayami? Are we losing him?
Can you hear me?
Yes, we can.
Okay, thank you.
Can we hear Abayami or we're losing him?
We can hear you.
So there's been a lot of confusion as to the implementation of this act, on who has the responsibility to pay the duty beyond just the 50 naira deposit and also on other instruments. And it just shows that there is a bit of gap in the understanding of the law, maybe because it's over 80 years and it's older than everybody here. So it's something that's really of concern that this law needs to be amended. And imagine the tax authority and the joint ministerial committee coming up to audit the bank. It's interesting to note that this joint audit is focused on the bank NIBSS only. It tells you the direction of what the FRS and the regulator are trying to do. But it's also a concern. You're coming back to implement a 1939 law and you are coming to check for compliance. The end game is known, more or less, but it's also to be noted that it increased the bank cost. In this age and time when we're talking of ease of doing business, and every now and then there is one audit coming up, one regulator coming up, and I can tell you in the last 4 years, the bank has audited more than 7 times by different government institutions. You had the RAMFAC audit, there have been 3 or 4 House of Rep committee reviewing stamp duty collection. Even at the Senate on the bank, there's been one audit or the other on this stamp duty, and it has created a lot of issues. Are we ready for the new auditors, new consultant? Well, as a bank, we have no option than to open our books to be audited and to check our compliance. And we all can testify that the bank have been deducting this stamp duty religiously over a period of 5 years. So we are open to have the auditors. It would have been better if this law is reviewed and revised and a new implementation. Like Baba mentioned, we copy from UK. As of this year, UK have amended their stamp duty hat, and they've even reduced the stamp duty hat on properties and some other instrument. But here in Nigeria, we want to implement what has not been revised in a long time. If I would speak to what Babarende mentioned on the section 39 and talking about receipt and what the Cbn Circular mentioned, where is in the law that stamp duty is payable on receipt, but what is the rate? The law says 2 kobo, not 50 naira. But you are coming to a review for 5 years on the basis of 50 naira. You can see the end game here. I don't think, I'm sure I've answered your question. Is there anyone I missed out?
No, but you can continue. You wanted to comment on the issue of receipts. You can continue.
I tried to clarify that what the duty payable on the receipt as contained in the law, not the schedule, not the JTB schedule, is 2 kobo, not the 50 naira. But if FRS and the circular is indicated that it's 50 naira, the bank should charge. As a compliance organization that the financial institution are, we are bound to obey our regulator, and this has been the case over time. Thank you.
Okay, we thank you very much, Abayomi. We will come back to the panelists shortly, But I just want to also, there's some issues that have come up. We've had a new word from Femi telling us that the Attorney General can summarily recover stamp duty. And, as a lawyer, when I hear words like summary, I always like to be clear. So I've gone to the law, and what the law says is that all duties, fines, penalties, and debts due to the government of the Federation imposed by this act shall be recoverable in a summary manner in the name of the Attorney General of the Federation or the state. Baba, just very quickly tell us, this power, does it mean that the Attorney General can set up an audit committee, or does it mean that he can go to court? What does it mean when the law says that, these things can be recovered summarily? Just help us understand that, please.
I think it's important, one, to note that this figure must have been determined, must have been due, and must be, for lack of a better word, the exact amount that is owed as the tax or duty or penalty or fine that is due to government. But what you have in essence happening, and it's happened to a number of clients, is that, Femi, you're laughing already, is that you find the Attorney General estimating that, I assume, Michael Ango PLC, from your operations, you owe the Federal Republic of Nigeria 22 trillion naira in outstanding taxes. Please, how was this determined? There was no appeal. There's been no fair hearing. You've had no judicial authority to actually make a pronouncement that this is the amount due if it has been disputed. You have not given the taxable individual or company the opportunity to actually dispute this tax and a determination made. I believe you'd have had a determination and a specific figure that has been determined as the tax due to the coffers of government before the Attorney General can go ahead and summarily demand or collect. He can't just, on his own whims and caprices, just get up and assume that Anderson tax, this is the amount that should have been payable from you for year 2019 or 2018. From a constitutional perspective alone, Anderson tax itself has a constitutional right to fair hearing, and there's no fair hearing here. And I believe once you take this before any court and just claim, look, fair hearing, simply, is my constitutional right.
That's interesting. We've gone into the purview of constitutional law. So we've spent about 45 minutes. What I'll do is I would begin to ask questions. There have been some questions that have been present. We'll ask those questions while we wait for more questions. So, the attendees, the audience can begin to send in their questions so we can address them to specific persons. Please indicate who your question is directed at and try to make it concise so it can be answered in a very short while. But Femi, you are the focus here.
Yeah.
First two questions are yours. So Abimbola Oyebowale has asked, how is consideration determined for contract/agreements with no monetary value? An example is where you have a reimbursable contract. So where somebody says, Michael, help me do XYZ, and I'm just getting a reimbursement for it. What is the value of that contract? Is it the entire amount? Okay, you asked me to go and buy you a laptop. I buy you a laptop for 100 naira. And let's even assume that there's a markup of 5% or 5 naira on it. What is the entire contract value? Am I paying on the 105 or am I going to pay on 5 naira? I think that's where the question is going. The second one is from Oluyemisi Dansu. Is stamp duty to be paid to FIRS on a transaction agreement between sole proprietors, or will this qualify as transactions between individuals and thus the stamp duty should be paid to LIRS? So can you answer those two questions for us, please? Okay,
well, the first question, the person is trying to delve into, he wants me to be doing, to go down into the, stamp duty is actually about the document you present. It's about an agreement. It's about the type of contract you go into. So if we are going to an agreement that's specific, I believe the law provides for different kinds of agreements. So I may not be able to give an umbrella answer that will be satisfactory. I may need to, that's why we have the Stamp Duty Commissioner that need to review such agreements before he can now assess the document. So I will not say it should be based on this or that. So I may not be able to, I wouldn't want to give an answer that is wrong. So I would advise, if such person have such document, either visit the nearest Stamp Duty office to you. The commissioner will adequately assess such documents and tell you what to pay. Okay, also about, even before I go to the second question, I would like to go to address something Baba Lokolaro spoke about, talking about that the audit, sorry, for you to recover a duty or a fine, you must have determined such. I will tell you that no recovery is done yet until the audit is completed. So the audit is first to establish the duties that are outstanding. So after that, before, I'm sure your clients that are coming to you, they are running because they are afraid that something may happen. So probably they want to just get prepared. That's why they are coming to you. But however, nobody will recover a duty that has not been yet determined. So also, I think it's Chinedu or somebody, no, it's not Abayomi. Abayomi also spoke about the issue of focusing and targeting banks and NIPs. I would like to also clarify that on the day of the inauguration, the chairman of FRS specifically referred to the Accountant General of the Federation and told him that they will be coming to him or coming after him because he pays for several transactions which stamp duty is supposed to have been charged. And so the audit is also going towards MTAs. I remember the Senate president on that day said he's aware that even the National Assembly will not be spared. So what we're saying is that the focus is not only on NIPS or the bank. It's an holistic thing. And I'll go straight to the last question. He said, if it's sole proprietorship, okay, if you go to section 4.2 of the Stamp Duty Act, it clearly states that when it's between a corporate entity and corporate entities, between corporate entities and individuals, body of individuals, so it will go to the FRS. But when it's between two individuals and whoever the law classifies as individuals, to go to the State Board of Internal Revenue. So it's very clear in the law. It's not it's not ambiguous. And Mike, I know I didn't answer one of your questions, which talks about how FIS intends to implement charging stamp duty on acknowledgement of money received via WhatsApp, SMS. So, like you said, I'm sure you said you understand that, because one of the first person that called my attention to it was someone from Anderson Tax, and asked, "Oh, there's been so much buzz in the news, in the social media, that FIS said they want to start charging stamp duties on SMS and WhatsApp." Well, it's very clear from the law I read to you. It says acknowledgement for received, acknowledgement for money received. So what I simply say is that if Mike transfer money to Femi, and Femi or Mike gives Femi money, it may not be even through the bank. You give me a cash, or you send somebody to give it to me, or in any manner, you give me money, and I simply send you an SMS, or simply send you an email, I send you a WhatsApp and say, "Oh, I acknowledge that money." What is saying? We already know that the essence of the stamp duty is to ensure that document exchange in agreements or document exchange between two people or two persons here are admissible in court. So in the civil proceedings. So what do we do when you have such a document? And thank God to the Evidence Act. It's been updated to ensure that electronic documents are also admissible. So you can take such information, such documents, and get your duty, pay your duty, and get your duty certificate, get a e-tagging or something, so that you can implement or such instruments that you have, irrespective of that. It looks like a casual evidence. It doesn't make it casual. Immediately you have paid your duty and you have an evidence. So these are my response to all the questions. Thank you.
All right, Femi, thank you very much. What I'll say in response to what you said is two things. You know, one of the attributes of a good tax is administrability. The question really is, if I give you 2 billion naira in cash today, and you send me a message, my brother, God bless you, you will never suffer in your life, your children's children will never suffer. Thank you for the 2 billion naira. It is an acknowledgement, granted, but who is going to find that acknowledgement in my WhatsApp message or in your WhatsApp message and you know, enforce the stamping of that acknowledgement? I mean, these are questions, they are practical questions, because the reality is that, you know, in trying to implement a law, you must also ask yourself, what is the possibility of implementing the law? Now, there's another issue which I will quickly refer to before I go to the next question, and it's something that has to do with the issue of the bank transfers. You've clearly stated to us that where a transaction is between two individuals, then the stamp duty collectible on that transaction should go to the states. But we know that the FIRS is collecting the 15 naira charge between my transfer and your transfer, the one I made to you last week. You know, when I bought the Range Rover from you last week, you know, the transfer I made, the stamp duty was paid to FIRS, not to Abuja FCT. So these are issues that we'll come back to. So let me ask another question from the audience here. It says, how does the stamp duty requirements specifically affect insurance companies and oil servicing companies? It's from Fumilayo Ogumbiyi and Bumi Alomaja. So they're saying, look, how does stamp duties affect insurance companies and oil service companies? Is there any special dispensation for them?
The law is very clear. When insurance policies...
Oh, sorry, Femi, that's for Chinedu. Sorry, that's for Chinedu.
Oh, okay, I didn't hear that. Sorry, I missed you at the point. Thank you.
Okay, I mean, thanks very much. I think there is the law provides clearly for insurance documents, but I think there's something that people need to understand generally about stamp duties. Like I think Femi has tried to clarify that it's actually a tax on documents, and there are so many kinds of documents that the law has provided for. And the one important thing that every taxpayer needs to do is to do like a capacity building in that area, because once there is a risk, like tax risk, then you need to start looking for mitigation strategies immediately. So each company, whether insurance, oil and gas, or whatever company, you need to look at your own transactions, look at the kind of documents that come out from, because the tax is not on transaction, but on the documents. You need to look at the documents that you have entered into and start assessing the potential risk areas based on what the stamp duty provides as of today. So yes, there are specific mentions of insurance documents and the rates applicable to them. I think there is a clear issue that some of the rates that FIRS have put in their circulars is contrary to the rates provided specifically in the laws, and that issue will come up during audits definitely. And of course, maybe it will be tested in court or tested in TAT to know what should apply. But in my view, the law will always supersede what the circulars. So a self-assessment is very important to determine, because not each company will have different kind of transactions they enter into. If you're renting an apartment, or if you're in your own building and all that, if you did transfer of shares, or there will be so many documents to review and determine your potential exposures, and then build your strategies to defend during the audit. And if you review and there are liabilities you are willing to settle immediately, even before the audit, I'm sure FIRS will be happy to receive such bodies from you even before they come for audit. So that's what I will advise companies in terms of specifics and how they will approach how they should prepare for the potential audits coming up.
This question from Mark Ogu for Abayemi, although I think you've largely answered it. The question is, how are organizations like banks dealing with the application of stamp duty rates on historical transactions and contract documents? I think you've answered this, but do you want to say anything additional, or do I move on to the next question? Abayemi.
Thanks for that. The question, maybe I'll answer in a different way, because often than not, before now, even before the amendment to Stamp Duty Act or before the Cbn Circular, banks have been paying one form or the other of stamp duty on every of their documents. These were the days where we used a NIPOST stamp, and which I guess was what led to the issue between NIPOST and FRS. For every loan document, you see a bank putting the postage stamp on it as a form of stamp duty. And the section of the Stamp Duty Act actually support this, that in the case where the adhesive stamp cannot be used, you can use a postage stamp as a form of duty. So banks likely have been compliant. It has been major cost to the bank, even though these were not taken from our customer. What the Cbn Circular likely does, what changed was the cost is now being passed to the customer after the Cbn Circular and the amendment to financiers. So our bank, in terms of the audit, now the Joint Ministerial Audit reviewing compliance for past years. One of the things FRS have done is to mention that in transaction where you've used a postage stamp, it will still be acceptable because it's allowable in the law, and I think likely bank will be fine. The only concern we'll have is the rate. If you look at what you have in the FRS schedule, the rate there differ from what you have in the law. So if you have been compliant with the law over time and the FRS schedule is giving you a different rate, it clearly shows that you may have an underpayment of duty on a particular instrument, which is something I think the FRS needs to create a forum to discuss with the taxpayer, now the bank, and come to an agreement for these past years as against imposing a moribund law and trying to enforce and collect additional liability. I don't think the drive should always be more about revenue. Like Chinedu has alluded, it's a tax. The tax system needs to be fair. It needs to be clear. It needs to be neutral. So all these are things we would think FRS should bring on board as they intend to enforce the stamp duty collection going forward. Thank you.
Okay, thank you very much, Abayemi. So there's a question from my former boss and mentor, Mr. Mark DK. I don't know if he's here. He's the former president of CITN, former director of tax policy at the Federal Inland Revenue Service. And he's asking a question. I'm sure it's a trick question, but Baba, you are the one. So he says, it has been said that modern versions of stamp duty no longer require an actual stamp. So how do you view this in the context of the controversy between FIRS and NIPOST? Baba, that's for
you.
you.
Mike, can you repeat that question? Yeah,
all right.
Could you repeat the
question? It says
that
it's been said that modern versions of stamp duty no longer require an actual stamp. How do you view this in the context of the controversy between FIRS and NIPOST?
Now, luckily, I neither represent NIPOST nor the FIRS, but let's go to the letter of the law. While modern conventional stamping of today doesn't require the physical stamp, we have an 81-year-old law that requires you to affix a stamp, that requires you to scratch off a stamp. Now, until the powers that be, which is actually the court, make a determination of who the appropriate authority is, that's where the answer gets resolved. Now, and I don't think either party should shy away from approaching the court. One of the beauty of a democratic process and the beauty of having a system of government that we're in is that your rights are guaranteed and protected by our different levels of government. Now, where a statute or a document seems unclear to a party, you have a constitutional right to approach the court to say, please, can you explain, can you clarify, can you make a determination on this particular provision? And that is where we will get the right answer from.
All right.
So we need a judicial pronouncement on this.
Yeah. What I would also say, you know, and this is my personal view, of course, I'm not a very objective party in the sense that I worked in FIRS previously, and I had worked on this particular issue as far back as 2013. We actually tried to resolve this issue, and we thought we had resolved this issue. And you know, what we recommended at that time, of course, we didn't have the Finance Act, which has now said that, you know, electronic stamping could be done electronically and all of that. But what we then said was, look, these are sister agencies. And so as much as FIRS collects the stamp duty, NIPOS should be allowed to sell the stamps. And that, in fact, FIRS should be encouraged or should encourage taxpayers, or in fact, FIRS should warehouse stamps in the offices of the commissioners of stamp duty. And I think we did that as a compromise, and acknowledging that, you know, NIPOS also needed to raise revenue. NIPOS' major source of revenue is, of course, the sale of stamps. So where FIRS takes over, quote unquote, that particular function, then NIPOS will feel like it's been left holding the short end of the stick. But again, like I said, that's my own personal view. FIRS will probably have a different view, and you know, the conversations will continue. Chinedu, let me quickly come back to you. This question is from Usman Mansour. Okay, it's very close to what was asked, but again, it says, how can Nigeria leverage on emerging technologies to ensure compliance, collection, and administration of stamp duties on products, services, and real estate? Did you get that?
Yeah. I mean, that is the. I mean, thanks for that question, because I mean, it's clear that that's the future of taxation. You know, tax technology is the way to go. And I think FIRS on their part is also doing a bit in that regard, even though their portal is still not working the way it should work. But there has been some attempts to also ensure people can, you know, engage with FIRS online and pay their taxes. Again, going back to the bank transactions, for example, I mean, you can say that the technology is fully implemented in that regard. The stamp duties are collected, you know, automatically, and you know, it's easy to collect and easy to remit and all that, because the banking transactions themselves, the banks themselves have done so much in ensuring that transactions are technology driven. So, and then it goes back to every other transaction like that. You know, for example, under the comma, share transactions can now be done electronically. You don't have to get physical documents and all that. So, as our processes as a company, as our business transactions as an economy evolve technologically, it becomes also easy to collect taxes and remit taxes based on technology. And it makes even audits easy, because electronic transactions are easier to audit. When the audit trails are easier to find. When somebody's trying to audit you for 5 years and you're looking for your rental agreement of, you know, 2016 or 2015, maybe you're not sure where it is, you're not sure if you paid, you know, it becomes difficult to get up. But when most things are transmitted electronically, they are easier stored and all that. So, and that goes back to what we're talking about, the tax law. It's the SDA itself, that it needs to evolve. It needs to, thankfully, based on the Finance Act amendment, at least it's now recognized electronic transactions and all that. But most of the documents in terms of our rental agreements and all that, it needs to continue to evolve to ensure that a few years from now, most of our transactions should be done electronically and based on tax technology. Sorry, I think Mike is muted.
Forgive me, sorry. So I said the next question is for Chinedu and Baba, and it's from Olani Olarewaju. And it says, in determining the scope of the Stamp Duty Act, what accounts can or cannot be charged? Is stamp duty charge allowed on domiciliary accounts? or stroke transfers or deposits in foreign currencies? If yes, collections and remittance to FIRS should therefore be in what currency? Secondly, is the stamp duty charge allowed on collection accounts for corporates and government agencies and MDAs? So Chinedu and Baba, you may alternate. Maybe you, Chinedu, take the one on the issue of whether it's stamp duty charges allowed on collection accounts for corporate entities and government agencies. Then Baba, you may address the
Okay. Thanks, Mike. Well, it's an interesting question, and let me answer it this way. I may not have the full answer, but let me answer it this way. And because it's something we've dealt with, we even have questions about diplomatic accounts and accounts of embassies and all that. Should it all be liable to SDA? And maybe Femi also give his views on that. But what is clear is that I think in the reform, in the update to the Finance Act, he said he used two interesting words. First of all, he said, notwithstanding anything in the SDA, he says stamp duty should apply to all types of accounts. Now, what does it mean by all types of accounts? And it overrode anything that exists in SDA. So we've had that debate with some clients saying, okay, so what happens even to diplomatic accounts? What happens to, domiciliary accounts? How do I take 50 naira from $1 or a pound sterling account and all that? And that's where I think Mike already talked about administration. You can have a law, but how do you administer? But for me, we always start with the legal basis first. If the law says all types of accounts, is there another meaning that can be read into that? Or does that really mean all types of accounts, including accounts of embassies, for example? If we establish that, then the issue of implementation becomes something we need to then grapple with. Baba, I guess you can share your views, and then we can. I also like to hear what Femi thinks.
Hello?
Yeah, Baba, can you go ahead? I think we'll wait for Mike.
Yes.
We can go
okay.
ahead.
Okay. Chinedu, I think largely you answered the question already. It will create a lot of confusion in implementation and enforcement. But I think a critical question we all need to address here, and Femi, maybe you may be the best person to help me. We all agree and accept that paying stamp duty and the charge of stamp duty is generally in relation to a document. Now, whilst we found some provision somewhere that talks about money being transferred from party A to party B and a receipt has been issued, it seems that we are assuming in every instance that I transfer 100 naira or 1,000 naira to Chinedu, that he's issuing me a receipt because I got an alert or a text message that was provided by technology. To be sincere, I'd like to know when that receipt was issued and what exactly is the receipt, because the reliance that I believe everybody, the action we all appear to be relying on is a message that is sent by a third-party provider and not necessarily the paying person and the recipient. So would that SMS, that alert, are you saying that suffices as a receipt? I just wanted to play a little bit of devil's advocate.
So, okay, you want me to answer your question now? Okay, well, let me first start with the question that both of you was directed to both of you. If stamp duties is chargeable on all accounts, the first thing is that if you go to the schedule to the Stamp Duties Act, there is a provision for general exemptions. And those general exemptions are there because somebody asked a question about if all corporate accounts or all government collection accounts are also affected. So when you go to general exemptions, it talks about where the duty is to be paid by government, such shall be exempted. So that is very clear. So you can't charge government account with stamp duties, it's clear. So also on diplomatic missions, of course, there is a general provision for diplomatic missions. There's a general law for them. If you go through the Diplomatic Immunities and Privileges Act, it confers them some specific exemptions. And also, you need to rely on such when dealing with them at all times. So I believe that should guide us. So you talk about, okay, if I'm assuming that you issue a receipt because you transfer money to somebody, well, the law says acknowledgement, all acknowledgement for money received. So one thing is that if you are supposed to do something and you did not do it, does not preclude you from the consequence of that. I'm very sure, well, I know you are the bigger lawyer here, you are the lawyer here. If if you send me, give me money, and I need, yes, I have acknowledged it. But you a receipt. I'm sure that it does not stop that transaction. It does not. And if I'm the tax authority, I can get from a third party that definitely that transaction occurred. I think I should be able to activate the collection of the tax due on such transaction. So you want to also relate it. I'll relate it to other forms of taxes. If a man has done business, if a corporate entity is a business, and at the end of the year he has refused to prepare his audited accounts or his financial statement, does that mean such person will not pay income tax? He doesn't. There's something he needs to do to ensure that when he does it, that is what the tax authority relies on, to ensure that he pays the right amount of tax. So if I can rely on a third-party information confirming that that transaction has taken place, then so when you talk about stamp duties, it's also, aside from being instrument, it's also transactional based. So there are two things that we need to see. I believe I've answered the question.
We've spent almost an hour and 20 minutes. We need to start rounding up. I have a few questions that I'll quickly read out, and then I'll try to answer them. One says, what's the disagreement between FIRS and NIPOS all about with regard to stamp duties, and has the disagreement been resolved? It's from Mustafa Sirajo. The question is that, Mustafa, the disagreement was essentially that there was a lack of clarity on who was to collect stamp duty and whether NIPOS could continue to print its stamps, and then FIRS is obligated to ensure that all documents are stamped with a stamp sold by NIPOS. The agreement is being resolved. I am aware that the Minister of Communications and Digital Economy said that they had written to the President and that a resolution will soon be in place, and I believe that that's the position. Another question is, for most transactions that FIRS wants to make compulsory for stamping, there's also VAT on it. So does that not, amount to multiple taxation? If you are stamping a document, you're paying stamp duty, you're also paying VAT. And does this not offend one of the canons of taxation as enshrined in the National Tax Policy of Equity and Fairness? Can FIRS respond to this question, please?
Okay.
So, Femi, what's your take on that, very quickly?
Okay, when you say transaction, of course, we already said right now that number one, what's the essence of you stamping that document? That is very, very essential, irrespective of the fact that your charge, VAT has been charged on it. Yes, VAT is on consumption of the underlying transaction. So now you consume a particular service or a particular good, you pay VAT. And what shows that that transaction occurred is an instrument. That instrument is also, stamp duties is just about you inviting government to be party in your transaction, so that when there is an issue, you still take it back to government to settle. And so if government is part of it, it's very easy for government to settle. So that is the essence. So when such transaction is occurring, the first one, which is the VAT, is for the enjoyment of that good. You pay that tax. The second one is just for if there's a litigation, there's a problem, you go to court. Government can say, yes, I evidenced this transaction. You can be the first witness to the transaction. And so there are different issues, different taxes, and also this is a fiscal matter, this is a fiscal policy matter. If it needs to be reviewed, the appropriate authority, the government will consider such or to see what they can do. Thank you. I don't know if I should use this time to also answer one question you raised about stamp duties being collected by a bank between transactions that are supposed to be between two individuals. So like I've said also, you know, stamp duty is also transactional tax. So if a transaction is a banking transaction, I'm very sure that the state does not have the purview to collect such transaction. And you know, the power to set, to give them the power to also assign different duty to different taxpayers, to different government, is derived from number one. If you check section 3.3 of the Stamp Duties Act, it clearly states that the government of the federation and the government of the state shall have the power to collect duties under this act to the extent that they have power to make laws over them. So banking transactions are not in the purview of the state. And if you go down to section 4.3, it clearly states, after describing the purview of or delineating the duty, the jurisdiction of both the federation and the state, it goes ahead and describes, it says, companies in this respect shall include banks and other financial institutions. So what it's saying is that wherever you see bank in the law, please, the purview, the jurisdiction is to the federal government. Thank you.
All right. Okay, Femi, sorry, Baba, you have the time to quickly respond. We're fast going, so I'm going to give each of you 1 minute to do a closeout. But I'd like to say some things, Femi, with respect to your view on the issue of transfers between two individuals. Do I then suppose that if I send cash through a courier, you know, assuming, I'm just trying to stretch the argument here. So if I send cash, if I put 10,000 naira and I send it through God is Good Motors, simply because that transaction was sent through God is Good Motors, it automatically becomes within the purview of the federal government. I think we'll be stretching the law if we take that interpretation. The act itself said, hold on, Femi, you have time. The act itself said that any transaction that is between individuals, the stamp duty is payable to the state. And the bank is only a medium of transaction. It's just like your mobile phone. If I make a phone call to you, 9Mobile, Glo, MTN, they are all corporate entities. But the transaction is between myself and you. But you have your time, hold on. So I just want to round up. There are a few issues that we've not really trashed. I wish we had more time. Sally, when we're discussing tax issues, time really seems to fly. So there's this issue again that's on evaluation of the schedule. I think there's an issue that we really need to be careful about. Chinedu has alluded to it. The current rates that we have in the schedule that has been put out by FIRS are not exactly what we have in the Stamp Duties Act. And if you look at section 116 of the Act itself, it says that only the National Assembly can vary, you know, the schedule and the rate thereof applicable that. And we're also aware of court decisions, especially the most recent one in the Hotel Owners Trust of the Hotel Owners Association, that said that even the Minister of Finance does not have the power to vary a schedule, and in particular, tax and levies approved this for Election Act. And it says that any such variation of a schedule by the executive is null and void. Okay, so these are issues that will come up. There are the one or two questions here. Let me quickly see if I can answer them before we close out. The issue of 5 years bank, or is it only for financial institutions? I think the question is no. I'm aware that MJs are also involved, and then also, yeah. For me, so I started marking this. Your closing remarks very quickly, 1 minute. Baba next, Chinedu next, and then we'll let Femi close out since the moment. So very quickly, closing remarks. Abayam, your closing remarks, please.
Okay. Thank you, Michael. Thanks, Anderson, for this session. There's so much to discuss that we've not been able to cover. Stamp duty, I wish we can say that FRS should just cancel this out because of this multiplicity of taxes, especially with the state of the economy. Maybe part of the pandemic, palliative should be let's scrap stamp duty, which is what is obtainable in other jurisdictions, and but it is what it is. Until that happens, we still have to be compliant as a bank, as a financial institution. But one thing we will request is the need to amend this act and make it clear, make it certain, and so that it's easier for taxpayers to be compliant, so it doesn't become a burden. The major issue the banks are facing currently is with the state. Recently, we got an assessment from a state in the east of 102 billion. The same 102 billion as stamp duty was assessed to all the bank. On what? On what transaction? And this is the issue the bank are about to face: multiple tax audits. You have RAMFAC audit you've had FRS, House of Reps, Senate, the state, and you have to attend to all these requests, which also distract you from doing what you should do as a bank, as a bank and as a financial institution generally. So our appeal as a financial institution is the need to have a forum where we can engage, we can make these taxes clear. We are compliant. We always want to be compliant and adhere to the rule of the land so that we can have a successful business. Again, thank you, Mike. Thank you, Anderson Tax, for this session. Thank you. And thanks to the audience.
Okay. Yeah. Baba, your closing remarks, please.
Firstly, I also want to thank the entire team at Anderson Tax, and it's been a pleasure talking to you gentlemen this morning. My final statement is truly an appeal to government at all levels. It goes without saying that our economy is shrinking, and is shrinking largely because we are a dollar-dependent economy and earn our foreign exchange from oil production and exports. And money isn't coming in like it used to. But we need a lot of foreign investment in this country. And we don't need to kid each other here. To get the level of foreign investment that we want, we truly must not just say we want to ease doing business here. We must ease doing business. And one of the things that we can help to ease doing business is to get rid of a lot of taxes. If we want this economy to begin to thrive, we need to chuck out a lot of taxes to ensure that the economy, has its own rejoles. Once the system is able to be operational again and businesses are thriving and profitable, then of course, Femi, you and your guys can come in and level your appropriate taxes on these businesses. And again, these tax laws have to be clear and precise and transparent. I shouldn't need to have to go to any official to tell me what I need to pay on an instrument or on a transaction. So it's very important for us in helping to develop our economy that the certainty as to the taxes that are applicable on individuals, on businesses, on SMEs are clear, transparent, and precise. And as we are right now, if the rest of the world and developing economies are reducing their taxes, capital gains tax, stamp duty, VAT, even if we are more intelligent than they are, let us borrow some of their sense, please. Thank you.
Chinedu, over to you.
Okay, thanks everyone, and thanks Femi for being with us and sharing your views. You are just doing your job as a civil servant, so the whole it's not you we're talking to, we're just exchanging ideas. But one thing that is clear is that these laws, it's good to know that the SDA is already being reviewed. I really hope, and I would advise that the FRS and the other parties that are working on it will take a lot of input from the public, the banks, the tax consultants, so that people, just like we had with the Finance Act, if you take a lot of input from the public and the taxpayers, you can come out with a tax that can be implemented. Yes, government needs revenue, and we know that government needs to continue to function. But taxes shouldn't generate as much controversy and as much heat as the SDA is generating. It means that there's something definitely wrong. So this process that is being undergone, it will be important to take a lot of input and streamline it properly. It's not really the number of taxes that determines the amount of revenue generated. 2 taxes can generate the required number of revenue if they are properly done and covers the right amount of people. That's what's important. And then, but for the taxpayers, of course, if the audit is coming, you have to prepare for your audit. You have to do your due diligence. You have to do your internal reviews and be ready, because even if the law changes next year, which hopefully it will, this period is already covered. So as you do your day-to-day transactions, it's important that you take the right approach to it and minimize your risk. Thank you very much.
Okay, Femi, very quickly, give us your closing remarks.
Very much for the opportunity to be on this panel and for FRS to be able to clear some of the things that are not so clear in the public. I would like to just address some issue before closing. Baba, you said maybe we should just scrap, or FRS should just cancel the law. Of course, you know that FRS does not possess such power, because this is a legislation just given to it, to FRS to administer. And also about the bank, we trying to speak to the bank and let them know. Of course, the bank can activate an avenue. Yes, we agree. We can activate an avenue for us to speak on issues that may arise, and so that we can all have a common ground. Definitely, I know the service and indeed the government at the center will be open to discussing, because a good business environment is the one that will bring a better tax, a compliant taxpayers. And that is what we actually want. We don't want to spend so much money auditing just to get taxes when people can actually comply. Well, the SDA being very old, older than many, older than every one of us who is actually practicing taxation right now, of course, we all believe that it should be worked on. It should be, in fact, we need a rebirth of that law so that it can be in tune with modern realities. Be as it may, the law is what the law is. It has to be implemented. And FRS is only trying to comply and to fulfill its mandate of administering all the tax laws that has been given to administer. And once more, I'd like to thank Anderson Tax for this opportunity. We believe many people have moved from one level of knowledge to another level, even at the end of this program. And I want to say we are always available to speak on clarifying things, and also to provide that needed information about taxation in Nigeria. Thank you.
All right. Thank you very much, Femi. I just want to be fair to a few of the participants. I'll try to take just like about 2 or 3 questions quickly before I round up. Someone has said, if stamp duty on documents and instruments, why then does the FRS want to assess stamp duty on transactions that the parties consummate without documents or receipts? I think that's one question that Baba tried to answer, Femi tried to counter it, but it's a question that also needs to be clarified. You know, what if it's a verbal acknowledgement? Do you then pay stamp duties on a verbal acknowledgement? So these are some of the issues that FRS needs to clarify. Contract between a government agent, if a contract is between a government ministry, who bears the responsibility? So I think for contracts, what FRS has said is that it's the person who gives out the contract that should stamp. Essentially, it then means that if you are getting a contract from government and government is exempted from paying stamp duty, then such a contract will not be subject to stamp duty. The issue of effect of stamp duty on small traders, MD, SMEs, and it's a very, very valid one. Someone says, look, if a small-time trader who is selling a bag of cement, that the margin on that bag of cement may not be more than 15 naira. So if you're asking the person to pay 15 naira stamp duty on the purchase of that bag of cement, you have wiped out his margins. Of course, the counter to that would be that he will not buy one bag. He may likely buy 10 bags, and so the 15 naira is on any transfer, and it's a fixed rate above 10,000. But these are valid concerns for people. For certain traders, those 15 naira, 100 naira margins are very significant. Another question is the approach for the proposed stamp duty. Is FIRS going to review agreements which companies signed in the past and 2 penalties for not paying stamp duties in the past? I think that is the focus of any audit. And audit is actually to look at your past dealings and transactions. So if there's anyone here who has such a concern, you may need to contact your tax advisors. Will stamp duty apply on intercompany transactions, loan agreements? Answer is yes. Is FIRS looking at collecting stamp duty on interbank transfers at the switches rather than the deposit money banks? I think for now, what I know is that it's the deposit money banks that are being the focus and not the switches. But I don't know. Maybe we can get more clarification from FIRS. And then are the IT payment solution partners, why are they charging additional charges when making stamp duty remittances online? So the question is, if I'm paying my tax, why should the online service provider charge me transaction fees for paying my tax? I think again that is for the payment solution providers. It's not a question for FIRS. FIRS cannot determine how those guys charge for their service. I think what we've seen here in the last hour and almost 40 minutes is that there's a lot of interest. People want to know what their tax obligations are, and it's important because nobody wants to pay more than he or she should pay. And more importantly, I think we all agree that in Nigeria there's a disconnect between what people pay and the services they receive. So sometimes that's why you see some of this resistance. But having said that, we quite agree FIRS is doing its job. It has the legislation to implement, it must implement it. But since you are the person who implement the law, I think the feedback to take from here is that there are concerns about how you're implementing. Taxpayers, tax practitioners, bankers, and all of that are concerned about how you implement and administer these laws. And for us, what we want to see is FIRS applying the laws in a manner that is fair, efficient, and allows everybody to be able to pay his or her fair share without any hassles. So we really thank everyone who's been on this panel. It's been an interesting one. I wish we could do this for 2 hours, but then we must all go back and look for our daily bread. Thank you for everyone. Thank you for the panelists. Thank you Abayami. Thank you Chinedu. Thank you Baba. We thank you for your presence here. We thank you for your insights. We thank everyone who's been here with us for the last hour and minutes. And if you have any further questions, you can always send them to Anderson Tax. You can by email. You can put them up on the chat. We'll be here to help you as much as we can. And we all thank you all, and we wish you all the best in your endeavors. Thank you, and God bless everyone.
Thank you.
Thank you, sir.